Subscribe to my channel Report Stock.
Have you ever looked at a company that just seems to be on fire? Like a real winning streak, just success after success, even when maybe its whole industry is kind of lagging.
Yeah, that happens.
Well, today we're diving into exactly that kind of paradox, really. We're looking at Elbit Systems. We want to unpack their latest financial results, which have really turned some heads.
Absolutely. And for this, we're looking directly at excerpts from a piece called Elbit Systems, Earnings Triumph and Market Performance.
Right.
It gives us a pretty sharp view of their Q2 2025 earnings report.
Right.
So our mission, essentially, is to decode these numbers, figure out what they actually mean for the company right now, maybe get a little glimpse of what's coming next, and this is key, see how it all fits or maybe doesn't fit into the wider industry picture.
Exactly. Think of this deep dive as, your quick way to get a handle on some, frankly, surprising facts and insights. Specifically, how one company's success story can play out against, or maybe even despite, the broader trends in its sector. So let's get right into it. Elbit Systems, the ticker is ESLT. They're a big player in defense electronics, and they've just put out their Q2 2025 earnings. What's the real headline here? What jumps out?
Well, the thing that really stands out is just how impressive these Q2 earnings are. Elbit reported $3.23 per share.
Okay.
Now, compare that to the Zacks consensus estimate, which was $2.57 per share. So that's a pretty strong earnings surprise of almost 25.68%.
Nearly 26%. That's significant.
It really is. In finance, a surprise that big, it often signals something major and positive happened that analysts just didn't see coming. Maybe a new product took off or demand spiked or, they managed costs exceptionally well.
And how does that compare to, say, last year?
Good question. A year ago, their earnings were $2.08 per share. So quite a jump.
You mentioned this quarter was impressive, but is this like a flash in the pan, or are we seeing a pattern?
Oh, definitely not a one-off. I mean, just last quarter, they also beat expectations, though maybe not quite as dramatically. It was an 11.74% surprise, then $2.57 actual versus $2.30 expected.
Okay, so that's 2 quarters running.
And it extends further back. If you look at the last 4 quarters, Elbit has actually surpassed the consensus EPS estimates every single time. 4 for 4. And it's not just earnings. The revenue side tells a very similar story. Q2 revenues hit $1.97 billion.
Right.
That beat the Zacks estimate by about 4.43%. And that's up quite a bit from $1.63 billion in revenue a year ago.
Let me guess, 4 for 4 on revenue beats 2.
You got it. They've topped consensus revenue estimates 4 times over the last 4 quarters as well. That kind of consistency, well, it really says something about how they're operating.
Okay, so let's unpack that a bit. Consistently beating estimates, both earnings and revenue. That sounds great, obviously. But what does that really signal for someone thinking about this from an investment angle? What does it tell us?
Well, fundamentally, it's a really powerful signal that the company is executing extremely well. When you see that repeated outperformance, it usually suggests one of a couple of things. Either they're being very conservative with their own guidance.
Sandbagging a bit?
Could be. Or maybe more likely they're just consistently finding and really grabbing market opportunities, maybe in specific niches, better than the analysts expect.
Okay.
And that kind of steady beat, it builds confidence.
Yeah.
Definitely. And confidence often translates pretty directly into how the stock behaves.
Speaking of the stock, how has it performed, especially with all this positive news?
Yeah, the stock's performance reflects this. Year to date, Elbit shares ESLT, they've added about 69.4%.
69% since the start of the year.
Roughly, yeah. And to put that in context, the S&P 500 over the same period gained about 9.6%. Yep. So significant outperformance there.
Definitely. So, okay, stellar performance, consistent beats. The big question for anyone watching this is, naturally, what's next for Elbit? How do we even start thinking about that, given this track record?
Yeah, that's always the million-dollar question, isn't it?
Yeah.
And look, there are no crystal balls. But one of the more reliable tools investors use is looking at the company's earnings outlook.
Okay.
And that's not just about the current consensus forecasts for the next quarter or year, but also how those forecasts have been changing recently. There's actually a lot of research showing a pretty strong link between near-term stock moves and trends in these earnings estimate revisions.
So where does Elbit stand based on that?
Well, based on all these factors, Elbit currently has a Zacks rank #3, and that's classified as a hold.
A hold. After that kind of run-up in those beats. That's interesting. Can you explain the Zacks rank a bit for listeners who might not know?
Sure. The Zacks rank is just a proprietary stock rating system. It runs from #1, which is strong buy, down to #5, which is strong sell. So hashtag 3hold basically means their analysts expect the stock to perform pretty much in line with the overall market in the near term.
So despite the amazing recent past, the expectation is more average performance going forward.
In the near term, yes. According to this specific ranking system, that's the expectation baked into that hashtag 3 rank.
Okay, so what are the actual numbers feeding into that hold assessment? What are the current expectations?
Right, so for the upcoming quarter, the consensus EPS estimate is sitting at $2.67, and that's on expected revenues of about $1.96 billion.
Okay.
And if you look out for the full current fiscal year, the consensus EPS is around $11.10, with revenues projected at $7.77 billion. So those are the targets analysts are kind of working with right now.
Got it. But here's where, for me, it gets really interesting. We've focused a lot on Elbit itself, its performance, its numbers. But companies don't exist in a vacuum, right? What about the neighborhood they live in, the industry?
That's a really crucial point. You absolutely have to consider the industry context. It can have a huge impact on a stock.
Yeah.
So Elbit is part of the ZAC's aerospace defense equipment industry.
Okay, aerospace and defense equipment. How's that sector doing overall?
Well, this is the twist. That industry right now is actually ranked in the bottom 36% of all the 250-plus industries that ZAC's covers.
Bottom 36%. So like the lower third.
Pretty much. And why that matters is research consistently shows that companies and industries ranked in the top half tend to outperform those in the bottom half by quite a margin, often more than 2 to 1.
Wow. So Elbit is putting up these incredible numbers, stock soaring, but its whole industry is struggling, relatively speaking.
Exactly. It's like they're swimming upstream against a pretty strong current and somehow still winning the race. It makes their performance even more noteworthy, really.
That is a fascinating contrast. So what does that tell us? I mean, how is that possible? Can you maybe give us an example of another company in that same bottom 36% industry, just for comparison?
Sure. Let's take a look at AeroVironment. Their ticker is AVAV. They're also in the aerospace defense equipment space, known for unmanned aircrafts, similar in some ways to parts of Elbit's business.
Okay, AeroVironment. AVAV.
Right. Now, they haven't reported their results yet for the quarter that ended in July 2025. But the expectations for that report are quite different.
How so?
The forecast is for quarterly earnings of 34 cents per share. Now, that actually represents a negative 61.8% change compared to the same quarter last year.
Ouch. A big drop in expected earnings year over year.
A very big drop. Although, interestingly, on the revenue side, they're expected to report around $453.5 million, which would actually be up massively, 139.3% for the year-ago quarter. So a mixed picture there.
Exploding revenue, but shrinking earnings per share expected. Strained.
It is. And maybe just as a side note, the consensus EPS estimate for AeroVironment, that $1.34, it hadn't really budged in the last 30 days. Analysts seem pretty set on that number for now.
So you've got Elbit just consistently beating everything.
Right.
And then AeroVironment in the same sector with this forecast of sharply lower earnings but higher revenue. And both are operating in an industry that's ranked pretty low overall.
Precisely.
It really shows this isn't just about whether a company is good or bad, is it? There are so many layers here.
Absolutely. So
Yeah.
if we try to, connect the dots here for you, the listener, the key takeaway isn't just Elbit's individual success story, though that's impressive.
Right.
It's the contrasts. The contrast with its own industry, maybe even with peers like AeroVironment facing different pressures. You've got the consistent beats, the amazing stock run. But then you have this hold rating suggesting caution and this backdrop of a poorly ranked industry.
So what's the deeper question that raises?
Well, it really makes you think, doesn't it? Is Elbit just that exceptional? Have they found a way to completely defy the gravity affecting their sector? Or maybe it's a sign that their specific niche within defense equipment, perhaps focusing on certain technologies or regions, is experiencing unique demand that's totally separate from the broader industry trends.
Yeah, it could be less about just good management and more about being in exactly the right, very specific place at the right time.
Could be. It might even suggest we need to rethink how we categorize these industries, especially in, today's geopolitical climate. Maybe the old buckets don't quite fit anymore.
It definitely shows that a company's narrative is never just its own numbers on a page.
Yeah.
It's this really complex mix of internal execution, market expectations, and these powerful, wider industry currents. So quite a journey we've taken there. We've looked at Elbit Systems' really impressive track record recently, the forward-looking view, which is maybe a bit more cautious, and this really surprising context of its industry performing, well, not so great.
And it leaves us with a really important question, something to you to chew on. Given Elbit's undeniable financial wins and that huge stock surge, how do you square that success with its industry being stuck down in the bottom third of all the Zach's industries?
Right.
What does that interplay really tell you about what drives investment value? Is it purely the individual company's strength? Is it the broader sector wins, even if they seem weak? Or maybe it's about believing the story management is telling, regardless of the numbers?
It's that fascinating tension between the specific and the general, isn't it? A really complex picture, definitely something worth thinking about as you dig deeper into any company's story.
Subscribe to my channel Report Stock.